Hey everybody, happy Sunday and welcome to episode 10 of the Stock Trading Pit Season 4. Today we have 4 segments as always, starting with segment 1, Talking with Traders with Dan and our special guest Scott Redler. Segment 2 is going to be the broad market recap, looking at some broad market ETFs, a couple metals, as well as some crypto names. Segment 3 is going to be the watch list with Rachel from VS Options and myself. And then segment 4 is going to be the weekend chart requests on Twitter as we always do. So sit back, relax, and let's jump right into it.
Hey everybody, welcome to another episode of Talking with Traders, where we get to know the people behind the trades. Today I've got a great guest, a legend with me, the great Scott Redler. Scott, for those of you who don't know, is the chief strategist at T3 Live and T3 Trading Group, and he's a frequent commentator on CNBC and Bloomberg and Fox and a whole bunch of other news outlets. He's also an Ironman. Scott, thanks for being here today.
Thanks for having me. So I'm glad to be involved.
It's a pleasure to have you on. So let's jump in. What got you into trading? How'd you get started?
It's a long story, and if we don't have a few days, I'm going to give you the brief version.
Okay.
So I started in 1998, basically when everybody and their grandmother wanted to become a trader right before the NASDAQ, went from 3,000 to 5,000, when everyone, was leaving being a lawyer, a doctor, a fisherman, a fireman, and they all wanted to be a trader. Well, I actually was a marketing finance major in Albany, and I studied finance a little bit, but I also wanted to be, a trader. So I went into a place called Daytech, Broadway Trading, which was literally like the read the tape, price action, no nonsense, day trading central, with about 350 traders, if not more than that, every different age. I learned how to read charts, read the tape. I was part of a group, and then NASDAQ went from 3,000 to 5,000. And then when the NASDAQ bubble burst, basically out of those 350 people who thought they wanted to be traders, it turned into about 30. And then that's when I got serious, and that's when I really started to learn technical analysis so I could actually make it into a career.
Okay. So when you first started, were you looking at charts at all? Or was it more about the tape and, the order flow?
It was really about higher lows and higher highs, right?
Okay.
Trends. That's what they taught. Same thing we teach now. It's repetitious. It's, same kinds of fears and emotions that create charts. You can read the tape, and I still actually have about 12 level 2s in front of me when I trade, which helps me with the speed. But basically, you learned how to read charts. I started to actually get serious, like I said, in 2002 up until the financial crisis. I took some classes. I took Willie O'Neill's How to Make Money in Stocks class, out there in California, which really the IBD method, which got me a bit more professional. And then I started to just put a lot of definitions behind the things that I was seeing, because I was seeing things and I was trading and very consistent and profitable, but I didn't really know, what people called it. And then finally I started to learn a little bit about the process and know how to name things that I was talking about, besides giving it, my own name, which I have a few, different strategies that I call that are funny, like the red dog reversal or this and that. But basically I've got a lot of, that 6-year time period was a very educational time period when I really learned how to maneuver the market more like a pro versus reading the tape, which also works, but it takes time to put them all together.
Okay. I'm curious, how would you, what are the differences between how a pro looks at the market and how an amateur does? You said you learned that lesson. What are some of the points of that lesson?
Well, it's seat time. A lot of people, recently, the last year or two, you see a lot of people who were in, whether they were in betting or casinos or sports gambling, they thought they could become traders and they could lead an arsenal of traders and say, hey, stocks don't go down. That's not true. Stocks do go down, and stocks are tradable, and stocks have active sequences, and you have to really know how to read them and behave and interact with them, versus sometimes you do get lucky, because yes, when the stock goes up, it's easy to hold, but all of a sudden when a trend changes, the amateur all of a sudden doesn't use stops, doesn't have a system, doesn't know their risk. And then all of a sudden, they turn a winner into a loser, into a blow up an account. Whereas then there's also, individuals that, watch a stock like in February when all those high growth names kind of topped out. And then they thought just because the stock was at 130, they could buy it at 80. And then all of a sudden it goes to 60. Then all of a sudden it goes to 40. They're trying to, catch a bottom that doesn't exist, and they blow up their account. So the amateurs, make money luckily at times. The professionals know how to, time the market, have a process and a routine that they love and they could do it every day. So this way they have their defined risk, but then they also know how to make money using patterns in a tier system. And it takes a long time to put that all together. So you could do it for, a bunch of years versus a bunch of months and then, leaving the business.
Yeah, I always like to say it's a 10,000 hour skill, right? Like you have to put the time in.
Yes, exactly.
Sorry, go ahead.
I was going to say, I'm a Rocky fan. Are you a Rocky fan?
A little bit.
So like Mickey says, it's for a 45-minute fight, you have to train for 45,000 hours for a 45-minute fight. So it's just like the same thing. Like you just said, you have to put in the time and you have to put in hours in preparation so you can make the right decisions in the first 15 to 30 minutes of the day when the market opens, when you're trying to maneuver with confidence and a process.
Okay. Do you consider yourself a day trader still, or a swing trader? What's your style nowadays?
It's been evolving. Like I said, I started at 22 years ago in 1998. Right now, how old am I? I'm getting up there. I'm in my high 40s, and a lot of people start out as a prop trader or a day trader, which I did. And maybe the first part of my career, I didn't have overnights. And then after a while, I would be a little bit upset because I'm like, oh, the stock did what I wanted to do overnight versus intraday. So after a while, when you get confidence and you have success, you could go from intraday to maybe intraday plus a day or so if it acts well, looking for follow through. But you have to be able to handle the risk if it doesn't go in the direction you want it to go in. And then you continue to evolve. I would say in the past 2 years, I've the way I've kind of talked to my communities, I'm like, you have to be like a mini portfolio manager. You can't really just be a scalper now. The scalper that's the HFT, that's the algorithms, they're trading for pennies. You have to be a very educated individual to be a trader in the market. And sometimes, yes, do I hold something, for a few minutes or a few hours and take cash flow out? Sometimes I try and hold things for a day or multiple weeks if it's trending. But I've been doing it for a long time, so you have to be able to handle that. You have to handle the risk. There are times when the market's in an active sequence to the upside, when I have 25 positions, massaging them, adding shares around chart patterns, taking them off when they have moves, and just maneuvering it like a mini portfolio manager. And then there are times when we trade below the 8 and 21 day, the market's getting faulty, and I'm going down to 2-3 positions, and I just want to day trade because it's not paying you to take risk on. So it takes time, though, to go through the process of just being a day trader, a day one trader, a swing trader, and then ultimately the way you really make money in the market is if you can handle every time frame. But that takes a lot of time and a lot of seat time and just a lot of experience.
A lot of eye strain.
Yes.
Do you use any indicators on your charts nowadays, or are you more of a pure price action type of chartist?
I think one thing that I talk about, which I do have an ebook with, it's moving averages. Moving averages kind of tell me what kind of composure of the market we're in. If the S&P is above the 8 and 21 day, typically that means we're in a strong market. There's momentum. That's when I try and have multiple positions. I like to use my chart patterns as a tier system for points of entry, so I know when I could be adding to shares of existing positions and then maybe taking off. I definitely use oscillators when we're very, very, very oversold. I tend to not want to be short. I'm looking for an oversold bounce. When we're very overbought, I tend to not want to get caught with too many positions on. I try and put some hedges on. So it's a formula. Depending where we're at, I use different types of indicators. But the one thing I want to say is that, some traders use too many. Okay. And they need confirmation of one and another before they put on the trade. And then by the time they get 10 different things coming together, the trade's already started and then they're not getting the proper entry. So I kind of call myself, like a cocktail napkin technician, meaning I use relative strength, relative weakness. I use charts and I just try and use a little bit of intuition and feel, and it's not that precise. And with that, I kind of just go about my day.
It's true. And the funny thing about using 200 indicators on your chart is most of them are computed in the same way, right? Like they don't read all that different, right? You just end up cluttering up and paralyzing yourself with too much information. I think I started that way. I had like 7 indicators up when I first started trading, and now it's like 2. Right.
Right, exactly. It's like simple, stupid, they say. And Art Cashin, who's my favorite technician in the world, he's a cocktail napkin technician. He would hold up a thing and say, hey, if it looks like this, that's an uptrend. If it looks like that, it's a downtrend. If it's going sideways, then you wait for it to go like that. And it's just, sometimes it's that easy. If all of a sudden the market's going up and your stock doesn't go up, it's not acting well, you probably should sell it. If the market's going down and your stock's not going down and showing relative strength, you should add to it. And then if it breaks out of a price pattern that has time frame continuity, you add a little bit more, because that means it's at a crucial spot. So
absolutely. Do you tend to stick to like longer term charts, daily, weekly, for trade entry, or do you go down into the intraday time periods?
It kind of depends. I usually put my game plan together based on daily charts. So I'll look at daily charts in the morning, combine it with news, and I'll sometimes look at prior day's lows. Sometimes I'll look at inflection points. But typically, before the day starts, I'm using daily charts. And sometimes, depending on the market, if we're in a decline, you have to go back to weekly charts to find points of reference. Sometimes the stock's breaking out, you got to look to the left, you have to go to weekly charts. But I typically like to look at prior day's lows, prior day's highs, to figure out who's going to win the battle of the next day. Because in order to go up for a second day, you have to get over the high of the first day. In order to go up the third day, you got to get over the high of the second day. Same way on a decline. If we're going to go down for multiple days, you got to know where the battleground is, so you know who's winning the war of that day or the war of the week, depending on what's happening. But I think the daily price points are more important. And then intraday, what you could do is you could put up like a 5, 15, 30, and 60-minute chart. So this way you can massage your trade once you've entered it, so you could handle it and take the most out of it.
Makes a lot of sense. Do you use any scanners, or do you tend to trade kind of the same list of names over and over?
It depends on the market. Sometimes scanners work. Sometimes, a scanner will pick up a stock trading a few 100% volume, in the first 30 minutes of the day, and that means money's coming in. So it could help you find what's in play. For me, I would say 80% of the time I have what I call the go-to list, which isn't always the same, but it's like 30 names that I know very well, and I kind of like put them in an order of like A, B, and C, and depending on the setup, I move them up and down depending on if I want to focus on it because there's a great setup. But then every now and then a new sector will pop up, and then all of a sudden that'll go on my go-to list or go on my note. Then all of a sudden a sector will be breaking down, and it gets kicked out of the list because there's only so many names you can look at. But I'm tending to look like 30 to 40 names every day, and then the majority of them have stayed the same for the past few years. Like I'm always looking at FANG. I'm always looking at the leaders, but then every now and then a new group of stocks come in that you can make money with until you can't. And but I tend to not like look at a new name on a scanner because I don't know it. I don't have enough confidence. I've never seen a trade, so I never really put big money behind a name that comes up on a scanner unless someone in my community points it out and say, hey, I know the stock really well. It's trading huge volume. It's a day one volume igniting bar. Maybe you should take a look, and I'll look and I'll see it, and then I'll do something with it. But it won't be as much as names that I know from my go-to list that I'm more comfortable with.
Got it. What are your philosophies towards managing risk? Do you use hard stops? Do you use trailing stops or mental stops? Like how do you keep yourself from losing too much?
That's a good topic, because a lot of people put stops in where they don't want to lose a certain amount of money, which is the wrong way to do it. That's a sizing issue. I put stops in where the trade changes. When I'm in something that's strong just intraday, there's a certain spot where, hey, if it gets below that, it's not as strong as I thought it was, and it probably doesn't close in the highs of the day. So that tends to be my stop. If I'm in something for multiple days, then the stop is different. Okay, you might have to put a stop, based on when that trade changes. Like if you're in a trade with something that came out with earnings and put it at post-earnings low 3 days later, and it's just basing, you can't put a stop in at the prior day's low, but you want to put it in at the gap, of that post-earnings low. So this way it stays above the gap. It could hang out for a few days and go. So some people put their stops too tight, and then all of a sudden they get stopped out of the trade, and then a bunch of days later it does what they wanted to do and they never go back. Stops, it's all relative. It all depends on the trade. So I always say, like, it's not about how much you want to lose. It's about what's your idea, what's your strategy. And if the stock doesn't behave with what you think it should do, then you use your stop, because the trade's not the same trade you thought it was.
Got it. Do you set like stop limit orders?
I do.
Okay.
Part of my routine is, I'm up at 4:45 every day, and I put together a morning note, and I do a morning video. I do a lot of stuff. By the time 11:30 rolls around, I'm like a piece of jelly, so I need to leave during the day, and I go and I take like a Peloton class, or I go for a run with my dog. And sometimes I have 8 positions, sometimes I have 24 positions. A lot of people are like, how the hell do you step away from your desk at 11:45 until 1:30? I'm like, well, I put the right stops in. And sometimes I make more money than if I was sitting at my desk, because something runs further than I would have thought, and I'm not just trimming it and I'm holding it. But if something changes, I'll get stopped out, and and I'll be out of the position. And if I happen to miss something midday, it doesn't matter, because most of the time midday is quiet. And if you want to trade for I've been doing this for 22 years, I don't think you could sit in front of your computer all day long. A lot of times I'd come back and there'd be hundreds of traders in my New York City office. Every one of them would be like all disheveled. I'll come back, just took a spin class, I'm showered, I went in the sauna, it's 2:00. Then all of a sudden the trade triggers between 2:30 and 4 when things move, not usually at lunch, and they already tried it too many times during the range portion of the day, and they don't catch it. So time of day is important. And I'll be an advocate that says you don't need to be in front of your desk 11:30 to 1:30. You're better off putting stops in and letting the trade work, and then being a little bit more set for the close, which is where some things usually happen more.
Makes a lot of sense. The midday is when I do things that I don't have to be in front of my screen as well, right? It's like, it's noon, let's go take a walk with the dog, because nothing's really going to happen.
Right, and then one day you miss something, you're saving your mental sanity and your mental capital for the 4 days you're not, and that's how you could continue to do this for a long period of time.
It's true. Trading is one of the hardest jobs in the world. I mean, it takes discipline, and it takes you to be focused and kind of at the seat of your chair all day, right? So if you can take a break, it's healthy. I think you're probably right about that.
It could be the hardest job, and it could be the easiest job.
That's
okay,
true.
We're not outside digging ditches. We're not in the mountains like where we could fall off and kill ourselves. Like you just say, we're sitting at our desk. You'd be playing some music. You could have the air conditioner on. So it's only as hard as we make it. So that's why you have to put yourself in the position to say, hey, in the morning I'm listening to music. That kind of soothes me. Sometimes I'm like, oh, I have 14 positions of futures down 15 handles. I don't want to look at my P&L yet. I just want to approach the day as if I didn't have positions, and go about the right trade versus the trade that I'm in. So how do you get in that frame of mind? You have to figure out what makes you tick to do that, so you can always be in the right frame of mind, so we're not making it so hard on ourselves.
I think it's smart. Actually, in my personal opinion, I'm going to ask you yours in a minute, but I think one of the biggest mistakes traders make is keeping their P&L like in front of them all day, right? You should be looking at the chart and deciding, at least the way I do it is I ask myself every time I look at it, would I buy it here? If the answer is no, then I want to get out, right? But I don't look at the P&L until the market closes usually.
That's smart.
Yeah.
You're not trading a P&L. You're letting the trade work out. Sometimes people see the number and like, oh, I want to.
Or they see red and they start to panic, right? It's like, like sometimes things zig and zag in the markets, right?
They do.
You mentioned a moment ago that you wake up early and you put a newsletter together and you do a bunch of stuff. Seems like a good time to ask you. Tell me a little about T3 and what do you do to help other traders?
So T3 there's 3 units. There's a technology unit, which is our black box unit. There's T3 trading, which is prop trading. So we have hundreds of associated members that trade with us in RBD. They're all licensed, and basically they all have different formulas on how they trade with us. And then you have T3 Live, which is the education division, the idea generation division. And I'm the chief strategic officer of the entire firm. But basically, I'm really more of the educator, idea generator for everyone around the world. Whoever wants to subscribe to my note, they can get it. Or if they're trading with T3, I think there's a different type of deal. So you can get both if you're a trader. But you don't have to trade with T3 to get my note or be part of the alpha team, which is 500, 600, 700 people that are on a site that get to see my positions. They get to interact themselves and help each other navigate the day. So I wake up real early in the morning, because some people write notes at night. For me, a lot changes in the morning. So I want to be as actionable and as real time as possible. So I wake up at 4:45 so I could figure out what happened overnight, where the futures are at, what's the news happening, so I could give an approach to my 30 names that I usually have on the list every day, and give like plan A, B, and C. If this, then that. If that, then this. And teach them why it's happening. I call myself like the offensive coordinator, because if I have 30 different actionable plays, maybe I trade 5 of them in a certain sector, and there might be someone else that says, hey, you didn't trade the banks today. I love the banks and you had to buy on this. I'm like, well, I don't have to do it for you to do it. You just have to know why you're doing it. So I try and put together my morning game plan on paper, so people could use it for themselves and make their own decisions. And if it happens to align with mine, then maybe it breeds a little confidence, so they put more shares on and they hold it longer by being able to have me kind of as a crutch. But I don't want to be too much of a crutch, because if I'm not here, I want them to be able to make money on their own.
Teaching them to fish.
Right, exactly. Everyone's like, oh, throw a fish in the boat, which I do at times. But what happens if Red Dog gets hit by a bus? All of a sudden, you're going to go hungry. No, I want you guys to eat forever. I'm going to teach you why and how and what I'm doing, so this way you could do it on your own and make your own decisions. And I think the mentality of my subscriber base is, they're trying to take accountability for their own actions, but they have to learn first, and then they have to execute second. And then if we could all do it together, like we were just talking about Robinhood the other day. Summer trading was a little hard, and then all of a sudden, 2 days ago, when Robinhood, after its IPO, started to set up, and everyone in the world started to hate it, and the institutions were selling it, and then Charlie Gasparino writes an article about how it's being shorted, and all of a sudden on Monday, I'm like, it's right above 37. I put together a plan, that if it gets above 38, the IPO price, I think you can get long. If it gets above the high that day of 40, all of these shorts are going to get crushed, and we're going to have a fantastic trade. And then boom, all of a sudden, a sleepy summer turns into a fantastic 3-day trade. And this is one of the only businesses that can happen to. But the only way it's going to happen is if you're prepared, you have a process, a routine, and you're ready to pounce because you understand what's happening, so you can get involved.
Makes sense. What when you have a new student join T3 on the education side, what are some of the biggest mistakes that they make early in their trading career?
I think they want to make too much money fast. They don't realize that it's a process. It's not a get rich quick scheme. It's not gambling. It's kind of boring at times. And like you said before, you need self-control. Like I say to someone, like, we're getting some new kids in. I'm like, listen, you just graduated from college. If you want to become a lawyer, you'd have to spend $400,000 in 3 years, to become a good lawyer. If you want to become a doctor, that's 7 years and who knows how much. I'm like, so why do you think you should be making 6 figures in the first 3 to 6 months of trading? Okay, to learn how to approach the financial markets, maybe not even a year. So I tell them, you have to come in and expect to learn the first year. And if you can make money, great. And some people do. You might even lose a little bit of money, which is kind of like your tuition. But then after a few years, if you get it and you have a process and a routine, it could be the hardest career in the world, or it could be the best, because you're making more money and the sky's the limit every single day. You can make a few $1,000s or whatever your goal is, without having to, leave your computer set up in your system and your process. And you could do it anywhere. You could do it like, where are you sitting right now, Dan?
In my office at home.
Where's that?
Chicago.
All right, you're in Chicago. I'm in New York. I have subscribers from all around the world. You could do it and approach it any which way you want from anywhere. Some people pay more taxes like me, like an idiot. Some people live in Florida. Some people trade, in Puerto Rico. Like, you could go anywhere. So, if someone's going to come in and say, hey, I think I should be killing it in the first 3 to 6 months or a year, I tell them, they have the wrong outlook, that they need to just take it a little slow. And sometimes I say do less, because a lot of people have to lose money before they get it to make it back. So I'm like, you want to lose less, so by the time you actually see things clearer, you're not in a hole to make it back and then make money.
That's awesome. That's a great way to put it, by the way, the kind of lawyer doctor thing and tuition. I think, it's relatable and something that people can understand if they think of it that way. Scott, thank you so much. I'm running out of time and I'm going to have to cut this off at this point. We already went over, and our producer is going off in my ear. Is there any last words? Anything you want to say to the audience before we sign off here?
I just want to say, listen, it could be done. Some people say out there, you can't time the market. You can. Everyone on TV is going to always say the risks of being in the market. I say there's a lot of risks not being in the market. You need to have a long-term plan where you put monthly flows in every single month, whether it's a 401k or if you have a kid, a 529, you need to have an active plan, which is an approach to the market every day with a process and routine. You can, especially if you're making money P&L monthly and quarterly, and then, as you get older and get some confidence, you could do a little bit of everything. But if you ignore the market because like, oh, it's too difficult, it's too risky, that's not the case. And most people make a lot of money, like the hedge fund guys, oh, I hate the market, but meanwhile, you look, they have like 2 billion in the market. So, it's just, learn and have a process that suits you, and never go on margin, never go over your skis. Don't let your highs get too high. Don't let your lows get too low. If you're going to be in it, you have to cost average your career. Like a lot of people last year made 4x, 5x, 10x what they normally make, in the last 10 years. So I'm like, don't go out and buy yourself the bigger house, the 5 more cars or this and that, because all of a sudden, if the market gets a little tougher and a little less liquid and a little less movement, you just made your nut, more, and you're going to force trades and get frustrated, and then you become frazzled, and that's not going to give you the longevity. So you have a few good years, pay down your debt. Yeah. So this way, when you have your average years, you're not so stressed out and you can still, see things clearly.
Thank you, Scott. And everybody, you should play this tape twice. There's a lot of great info in here. Scott, thanks again. It's always a pleasure. I hope you'll come on one more time at some point.
I definitely will. And thanks for letting me use TrendSpider. Great software, great charting platform. I love to be part of your team as well.
It means a lot to me coming from you. Thank you again.
All right, let's jump into the broad market segment, looking at some broad market ETFs, some gold and silver ETFs, as well as a couple crypto names. Starting with SPY, as always, kind of a weird week. Now, the reason I said it was a weird week was because some of these individual names were just moving very weird. But all in all, the SPY at least did pretty well. So you can see here on the daily chart on the left, we have a simple volume shelf. So all I did was anchor the volume by price from this July 19th low here. And you can see here that a lot of volume started aggregating right around this 440 to 442 area. And then finally, we got the move up into the end of the week. Now, going into the weekly side of things, you can see here that we continue to get tighter and tighter within this ascending wedge. Still room to move up though, and a pretty strong close to the week. So all in all, a pretty decent candle going into the week ahead. And remember, August does have an 83% win rate for the month of August going back 5 years. So a lot of people are saying, oh yeah, August is slow, August is this, August is that. Well, it's definitely volatile because the VIX has a 100% win rate over the last 5 years. But you can see that August has an 83% win rate. So a lot of the time it does close green. Now going into the Qs, we have a little bit of a similar situation here. So if we anchor the volume by price from that July 19th low here, you can see that we did bounce nicely off this anchored VWAP that we were talking about last week. And then we've got the volume shelf kind of holding price on Friday. We did kind of launch off of that on Thursday and then pulled back right back into it on Friday. Now, on the weekly side of things, you can see here that we've been talking about this 1.618 extension. We did break through it a couple weeks ago, and now we're just kind of bouncing right at it. And we did close once again above it this week. So all in all, looking relatively strong, a solid green candle on the weekly. So until that price action really changes, it looks like blue skies ahead. Same thing with August, 83% win rate. So not a lot of bearishness, at least in the historical seasonality. Now, going into IWM, this is one that does seem to finally be catching a bid a little bit. If you look at the daily chart, you can see here that we do have kind of a mix of this very rough looking symmetrical triangle that we did close above this resistance shown by this orange area. As I mentioned, it's a very loosely defined symmetrical triangle. The main thing that I'm looking at here is just the fact that this dashed line has been acting as support. You can see that this downward sloping line with the orange triangles definitely was closed above on Friday. So all in all, you've got this small kind of breakout here within this larger ascending triangle. So notice here that this has been forming for quite some time, actually since really the September lows. And then you can see that we've had a couple touch points on this ascending support. And then you can see we've had multiple times where we've had this horizontal resistance act as a level of a selling point for us sellers. So going into the weekly side of things, you can see here that we do still have this breakout anchor VWAP holding right where it's supposed to be. We did break through it couple weeks ago, but we've been holding it. We've had 3 green weeks in a row. And if we turn on the volume by price and anchor it from the COVID lows, you'll see here that this volume shelf that we're talking about possibly being a base for price over the last couple months is now actually acting as a supply zone above. That's highlighted in orange. And so far, we'll just have to see if this breaks. But until then, we're stuck right at this point of control, right around, let's say, 225 or so. Moving on to XBI biotech, that is. Some interesting stuff here. So on the daily side of things, we possibly have this W bottom forming. So you can see here these 2 green circles would signify kind of your double bottom. Now, do we get the W formation where we get kind of a straight move up right back to the 140.50 to 141 area? We'll just have to see. But on the weekly side of things, if we turn off the volume by price, you'll see here that we do have, once again, a nice hold of this low, this COVID low anchored VWAP. So all in all, definitely kind of at a point where we're either going to break down through the anchored VWAP or we're going to break out of this resistance line. So notice here that we don't have a lot more room until we either break to the upside through resistance or break to the downside through this anchored VWAP. Now, what we could also do, and that's very possible, we could also literally just trade sideways. We could do one of these and just go like this. So, there's a lot of options where price can do whatever it wants. So this is just one perspective out of many. But all in all, if we did want to really break this downtrend, we need to break down through this downward sloping resistance, and then ultimately we need to close right above this anchored VWAP here. So that is right around let's say 136 to 137. So you definitely want to see a weekly close around 137 to really get things going. That would be above resistance and above that all-time high anchored VWAP. So that is XBI. XBI, not too strong of seasonality. Now, remember, we do want to exclude 2021 because that's including that, assuming that this month has already closed green. So August does have a 60% win rate so far over the last 5 years. So not a ton of an edge there as far as historical seasonality goes. One thing I'll bring up quickly on VIX, I just want to point out the VIX is just so predictable on a Friday. I mean, almost every single Friday we look at the VIX, it's always down. Why is that? Well, if you go to the day of the week seasonality since the beginning of the year, you'll see that the VIX only has a 27% win rate. Now, if you let's go back since 2010, you'll see that once again, Friday still is the weakest day of the year, the weakest day of the week going back 10 years. So it's not like this is something that's specific to this year. I mean, in this case, I am starting from January 2021 just to see what the win rate is in 2021. But even going back a decade, Friday is still the weakest day of the week. So all in all, VIX is just a day for absolute melting. But then what's interesting is Monday does have a 67% win rate. So is it kind of buy the dip on VIX and sell into the rip on Monday? That's kind of what the seasonality suggests, but obviously everyone's got to do what works for them. Now, going into some metals real quick, GLD, SLV both look absolutely horrible. Not really going to spend a lot of time on here because all I need to say is they're breaking down. They're looking absolutely horrible. It really seems like the inflation kind of play here is definitely crypto instead of gold and silver. So many people have been talking about gold and silver now for a while, talking about that, oh yeah, inflation and silver is going to go to 50 or 60 and gold's going to go to whatever number that, they pull out of a hat. But all in all, you can see here that the main thing that we talked about last week was this alert on this trend line below. Now the alert triggered right around, that was right around 165 or 166. So if you would have had the alert trigger, you would have at least been able to take advantage of the drop or stop out if you were long a little before we actually closed much lower than that on Friday. So all in all, the alerts definitely saved some people or helped them enter. Let's say they were shorting gold or they were buying puts. Definitely had that breakdown this week. And SLV looks honestly the same. Actually, it may even be a worse weekly candle here. The main thing that I'll talk about on SLV is the fact that we do have this anchored VWAP with this percentage offset. So you can see here that we've got the original anchored VWAP in this thicker blue line, but then you can see we've got another percentage offset above that because there have been times where the price has not actually touched all the way down to that VWAP. There's one back in December of 2020. There's another one here back in April of 2021. Barely missed it. So this is why you want to have some margin of error around these lines, these anchor VWAPs, these trend lines, whatever the case is. And remember, using the alert system, you can also create these margins of error as well using the sensitivity feature that I'm doing right here. So all in all, this is a pretty crucial level to hold. If we do break down, that's not going to look pretty for SLV and just metals in general. Now, On the daily chart, you can see that this support trend line has actually held pretty well. Once again, notice that you don't have that many touches on this exact trend line. It misses there, misses there, misses here. We actually have a connection here with this point and then this point. And then once again, we barely missed it today. To solve this problem, all you need to do is create a little sensitivity around this area. And now you're capturing all that price action that didn't touch that exact trend line below. So all in all, anchor VWAP right down around, let's say 22, almost on the dot. And then if we broke down through this downward sloping trend line, let's say right around 22.30 or so, things may get pretty rough. So that is GLD and SLV. Now let's look at Bitcoin and Ethereum, two that have done very well over the last week. And so what we were talking about last week was really this swing high anchored VWAP here. It acted as resistance. We mentioned that, this could be an area where the price could pull back to. That's exactly what happened. Then we bounced right off of it. Of course, we undercut it by a couple $100. That's pretty classic, especially in crypto. But this did act as a nice support resistance flip. So sometimes you'll hear somebody saying SR flip. That means this previous resistance highlighted in red, which is just the swing high anchor VWAP, flips over to now a support zone after breaking out. So nice bounce there. Now on the weekly side of things, I wanted to point out the accumulation distribution indicator anchoring from the quarter to date. So you're pretty much starting the accumulation distribution indicator over every quarter, but it's a continuous indicator. So it kind of connects all of the quarters together. And you can see here something interesting. Right before we bottomed back 2 or 3 weeks ago, you can see that the accumulation distribution went from red to green. And a lot of the time that has been a signal for a continuation move up. So you can see that here back in 2020, we broke through this threshold here. So it was red, then it turned green here. And then that was really the start of the new bull market. So anytime this goes green, it's worth noting. And, this could be the start of a bigger move to the upside. We'll just have to see if we can get through this all-time high anchored VWAP from this weekly candle from the all-time highs. And until then, we're still kind of stuck in what I'd call just a very range-bound market. So 45,000 is right where this anchored VWAP is. Now, remember, this is an anchored VWAP percent offset. So this is 7.5% higher than the actual all-time high anchored VWAP. Why did I do 7.5%? Well, you can see here, here, and here all are times where we did break above that all-time high anchored VWAP, but didn't get above the 7.5% threshold. So you can see that would be the target above, which is right around 45K. So that is Bitcoin. Last one is Ethereum. Ethereum's looking very strong here as well. Same thing, if you anchor the VWAP from the all-time high, this initially was resistance a couple times back here. You can see that I'm highlighting it red. And then finally it flipped over and now it's green. So another support resistance flip, SR flip using the all-time high anchored VWAP. And then if you look at the accumulation distribution here on Ethereum, notice that every time we've gone red to green, this has been a signal for bigger moves to the upside. So we're just starting to cross here. We'll have to see if we continue up or what really happens. But all in all, definitely showing a change in money flow using this indicator. And we'll just have to see if crypto is actually ready to take off. Based on Ethereum really leading the way, it looks like we may be in for some new highs, maybe a retest of all-time highs. We'll just have to see how it plays out. But it's interesting because if you look at the data on the monthly side of things, historically speaking, August isn't that strong of a month. So if we exclude 2021, August only has a 40% win rate. So, this is a great example of historical seasonality not always, playing out exactly how you'd think. So Ethereum, probably one of the stronger cryptos right now. We'll see if all the other ones follow. And that is it for the broad markets. Let's move on to the next segment. Alrighty, let's jump into the watch list segment for this weekend. We have special guest Rachel, who's the founder of VSOptionstrading.com, and she does a lot of longer term charts. You'll definitely see on her Twitter page a lot of weekly charts, setting up kind of for longer term moves. So I think today we're really going to be looking out, maybe a week at plus, maybe a couple weeks at this point. So Rachel, welcome to the show. Thank you for coming on and being a guest.
Thanks, of course. So can I go ahead and just go into MU here?
Yeah, so I guess before
Okay.
you jump in, I know it looks like you've got 5 to go over. Can you just kind of go through your chart? Because I know you're well known for keeping your charts very clean and kind of only having a couple indicators on there. So can you just go through just some of the indicators that you do have on the chart and why you're using those particular indicators, and then we'll jump right into the names?
Yeah, of course. So mainly I like to look at trend lines. So I usually look for 3-point or more trend lines for a breakout. So I look for downtrend breaks, uptrend breaks, falling wedges. I like to use the 10 and 50 day mainly. That's what's worked the best for me because I actually bring over the 10 SMA into my intraday as well. And I also use MACD for more of a confirmation of that trend change, since that's what I like to look for. And I like to start with the weekly chart and then bring it down to the daily. So I'll give an example of that right now. For MU, I actually posted this on Sunday night on my public Twitter. I had these 2 lines drawn for this falling wedge, and I was saying if we could break above this week's high, we might be able to test this upper trend line. And we ended up breaking out of it already, so I ended up buying some shares here at this trend line breakout yesterday around 80.69. So if you wanted to take this as a long idea, I will be waiting for this week's close, and you can use the high of this week, whatever it will be, as the next long entry. And for an example, down to the daily, we have another little trend line break here with that bullish MACD crossover. We held this 50 SMA that I like to use. So if we were to break above this high, what I would be looking for as targets in the short term would be this gap fill here at the 85 level, and then a gap fill here at the 89.5 level. So this would be like the zone that I would be looking for as a first target. And if we were to break above that, then I would be looking at these pivotal highs. So like I said, I really like this for the falling wedge break on the weekly overall, because that's what I like to look at mainly are these weekly setups. It's a possibility, since this is starting to curl here, that maybe we could get back to highs like AMD. AMD is one I took at 94 and went long that stock, and that ended up ripping this week. So that was a nice one.
And are
But
you
that's all I
mostly
have for MU.
trading options or common? I know you kind of trade a mix of everything, but for these, when you have a target, do you sell at the target on these options, or just if there's a big move to the upside and it doesn't get to your target, are you taking advantage of kind of that IV spike rather than just a function of the target? For those that maybe are looking for looking at just how you trade options versus common and that type of target way of thinking.
Yeah. So for this one with MU, I actually went long common because I'm looking for a longer term move off of this falling wedge break, because I really like falling wedges, and it could take a little bit longer to develop, and it's a little bit harder for, I don't know, in my case with monthlies, it's kind of hard to pick a strike in my opinion, because I'm so used to playing weeklies in a week out. But if I were to play weeklies, I would try to find something close to the money. Like, so today the high is 83. So if I were to go long, I would probably buy the 83 calls for this week for a potential target here. But right now, since MU has had some choppiness, I haven't added any weeklies there because it's a tougher trade in my opinion. So like I said, for this one, I would like more of a long-term hold for it.
Cool, makes sense. Next one looks like we've got Tesla.
Yeah, let me go to the weekly on that. Okay, so Tesla, this is actually a trend line that I've had drawn here for a few weeks. I think I posted this on my public Twitter a while ago as well. So as you can see here, before when it broke this, I had 700 as an entry, and that ended up taking a while to actually break through. So if you can see here, this trend line's been respected pretty well this week, and then there was a nice pivot here post earnings. So I still like this 700 level. I think that if it can break above 700, hold above 700, then it has a lot of room above. So I'll be watching this 700 level, and I brought it over here. Oh, sorry, that also had MACD cross on the weekly. But if you bring it over here, I noted this 700 level. I'm watching this consolidation right here. It looks like we might start to consolidate here, and it looks like we're forming a flag. So if we can hold above the 700 level, I think it has a lot more room to the upside. If it were to break below 700, I like to use the close, so I would use this 687 level as a gap fill. So if it were to break above here, I'm watching this gap fill right here at 738, and then if it broke above that, I would be watching this pivotal high of 781. So with levels, I like to use moving averages and gap fills and pivotal highs and lows. So if it holds 700, I think it's in play for sure. And this is one that I actually played calls on.
Nice.
Last week into this week, yeah.
Beautiful. Yeah, it was a strong move early in the week. So very nice play there. And definitely the weekly MACD is looking very interesting, just really starting to curl. So last time it crossed, it had quite the steam behind it. So
yeah, it was right over here. So, and then when we got this cross to the downside, it had a bigger pull. So this is the first time we're seeing it actually start to cross to the upside. So it'll be interesting to see how high it can go if it holds that 700 level. But I'm definitely keeping an eye right on 700 for strength.
Makes sense.
Okay. And then there's Zoom. This is one I also posted on my public Twitter. I like this falling wedge breakout, and it's holding above it well, and now it's having that higher low. And it's also regaining interest because of the Delta variant concerns and everything. So I saw, I think it was like named a hot stock today or something like that. I think I saw that on Benzinga, but I like this higher low. It's holding above the 50-day, but I'm watching this area at the 4065 for next breakout. So if it can break above there, I do think it has a lot more room. If I bring it over to the daily, it held this trend line that I've had as a support. So I'll be watching that for next breakout. I'm actually in calls right now of this. So I'm in the 410s for this week. So it's definitely a riskier play. I like playing smaller when I play weeklies, but if it can break above this 406 level, then I think it has a lot more room.
And a recent MACD cross on the daily, right?
Yes. And it's holding above my two favorite moving averages as well.
Beautiful.
Okay, and then I have Roblox. So this one's funny just because my kids play it, so I've been seeing kind of the new features that it's adding, but like I said, I love using trend lines, so this one's tested this 3 times here. It hasn't really tested it perfectly above here now, but it has earnings on August 16th. So since it's holding these higher lows here, if it can break above this trend line, I'm looking for a possible run into the report. I've also seen a lot of sweepers on it as well, which could be irrelevant, but it's interesting to see. And right here is another one where I like to bring it over to the daily. So I had this little trend line drawn, and it's closed very strong above here with the MACD just now crossing. So if it can break above 81.91, that would be a trade idea of mine, like in the morning, of something that you could take maybe some earnings calls on, because those will hold premium better into the number. So if it holds above that, that could be something that you could consider to do. And I would use this 85.94 as resistance, which is the 50 SMA, and this pivotal high around 90. And you can see here when it had the last trend line break with the MACD cross, it had a nice run to new highs. So obviously this one has earnings, so it could go either way, but I'm looking for a possible run into that report. But I have no position yet.
Well, it looks very similar to the last time. You got the trend line break, MACD cross, so I like it.
Yeah, and then that overall weekly one, it would need to break above today's high, I think, to break that one. So, and then my last one is coin. So I just drew a trend line from April down to here. What I like it more, or why I like it, is all of these higher lows that it's been holding. So it's held a higher low here, here, and now here, and it closed strongly above the 50 and 10 SMA, and this actually just crossed right here. So if it can break above this high, I think that it's possible we could start forming a V bottom here. I mean, this looks a little bit sloppy, but you do see a little inverse head and shoulders here on the daily as well, right here. I usually like to use inverse head and shoulders, like bigger ones, but I mean, this is a mini one here. So if it can hold above this, if it can hold above the trend line, I'm looking for a possible V bottom. So I actually just added some shares of this today as well. And like I was saying earlier to you, like sometimes it does have some correlation with Bitcoin, and Bitcoin also broke trend, and like Mara and Riot and GBTC, all those names were up today. And like you were saying, Robinhood had a huge run as well. So
Yeah, that was absolutely nuts. Well, I know a lot of people have been watching this trying to base, so who knows? This could be finally the break that we need. Crypto's up, Bitcoin's trying to break the highs that it previously had last week. So I definitely get the logic there on the chart, but also just the sentiment. So awesome. Well, I love how you keep it simple. I love the colors that you use, easy to read. You know, you're just very clean on all the charts that you create. So I know a lot of people enjoy watching your public feed. And for those that are not familiar with your community, do you want to just mention a little bit about where they can learn more, possibly to check out your room and all of that?
yeah, so I have a link in my bio. So my Twitter handle is Rachels_44, and my website's vsoptionstrading.com. And we just have a chat room and private Twitter where we share all of our ideas. And I post a watch list every Sunday that look just like these, and it'll consist of normally 10 to 15 charts every Sunday. And then I've been using your alerts that I love so much. So these are actually some of the alerts that I've had, which are pretty cool. Like you could take Google if it were to break above yesterday's high at 27.15, then it'll notify the room. It'll be like TrendSpider bot, Google broke the trade idea entry. So I love it. It's like such a great feature.
Nice. Yeah, the webhook. So I'm glad you guys got that figured out, because it makes it a lot more efficient. So you don't have to tell the whole room, hey, we broke. Everybody gets that alert at the same time if there is a break to the upside or the downside and all that good stuff. So
yeah, so I use that for all the Sunday charts. So it's worked well.
Sweet. Well, we appreciate you being a guest on the show, and I'm sure we'll have you on again soon. Maybe we'll even do another one of those going into the new month of whatever month we do that. So definitely check that out. That we'll probably have one of those coming up in the next couple months. But Rachel, thank you so much, founder of vsoptionstrading.com. And let's move on to the next segment.
Thank you so much.
All right, time to look at some chart requests. We have 5 charts to go over. We have Disney, Tesla, Roku, Amazon, and Chewy. Starting with Disney, Disney's one that really had an interesting move a couple weeks ago and then just failed to get through the anchored VWAP and hold it. Now, it did get through the all-time high anchored VWAP, but you can see here that we moved straight back down from where we started, and now we're kind of stuck. And the same thing, I'm using an anchored VWAP with a 2% offset here. So it's capturing that move that did get above the anchored VWAP, but clearly that's an area of resistance that you would want to watch, or a level of interest at least, that you'd want to watch if this continued to move up through the anchored VWAP again. Now on the daily side of things, we have the COVID low anchored volume by price. You can see just this huge shelf forming here. Now the only thing that you have to consider, I would say this is a decent setup here on the volume shelf with the price kind of holding right at the point of control, but looking at August, September, and October, all horrible win rates since the beginning of 2016. So definitely not the strongest time of the year for Disney, but we'll just have to see how that plays out going into the next couple months. Remember, seasonality is not an end-all be-all. It's a thing to complement your analysis in other parts, such as technical, fundamental, those types of things. So Disney pretty much stuck below that anchored VWAP until we get above that. We're kind of range bound here as well. Now going into Tesla, Tesla started out pretty strong and ended not so strong on Friday. So the main thing that I'll point out here is we've kind of had this chart up for quite some time. If you anchored the volume by price from the swing high here, this was the area that we needed to break through. We broke through. We had a little bit of a pennant forming here and broke right down through it on Friday. So not the strongest setup, possibly a retest of this breakout zone, which would be around 680. We'll just have to see what happens into next week. Now, if you look at the weekly side of things, if we turn off the volume by price, we had that beautiful breakout last week, strong move up, and then just almost a close near the weekly low. So all in all, not what I'd call the strongest weekly setup. And as I mentioned, this area around, let's say 680 below would be your next volume shelf below, but also that would be your previous resistance. So right in line with kind of technical, just basic price action, but also using the volume by price technical side of things as well. So 680, if we continue to break down, that would be the area that I'm personally watching. Now going, and one thing I'll mention, we mentioned this last week, September does have a 20% win rate. So we're setting up for possibly a bigger move to the downside. We'll just have to see how price action does, because that's always the number one. And then if price action and seasonality kind of are in line, that's when you maybe get a little more conviction. But for now, there's plenty of time left in August to see what happens from here. Now, Roku is one that we had a huge move to the upside and then a huge move to the downside. If we anchor the volume by price from the low here, you'll see that this is a great example of using the anchored volume by price with the anchored VWAP. Because if you were just looking at the anchored volume by price, you'd see this huge volume gap below. However, anytime you're looking at a volume gap, you always want to kind of anchor the volume by price from exactly where you're anchoring the VWAP. And you'll see here that we literally bounced right at this swing low anchored VWAP right at around 380. So for now, it's holding, not necessarily the strongest day on Friday, and definitely not the strongest weekly close. You can see here that we do have this breakdown of this trend line support, and not necessarily the strongest setup going into next week. Now, August does have a 100% win rate over the last 3.5, 4 years. And that's pretty much since the IPO. So we can't go back 5 years because Roku hasn't been around that long. But since the IPO, August has had a 100% win rate. So just keep that in mind on the seasonality side of things. Now, Amazon, also one, not looking too hot. This is one of the weirder charts I've seen. So just an absolutely ridiculous gap down from earnings. Now we're kind of stuck at this volume shelf here. And we held it all week. Now, the thing is, do we break down? Do we break to the upside? If we break down, we have this volume gap below all the way to around, let's say, 32.50. And then you'll see that this next kind of shelf pops up here. Now, if we move to the upside, we also have this gap. And then your target above would be, let's say, around 34.30 to 34.50. So we kind of have these two gaps that we're trading right in the middle of, and we'll just have to see which way the price actually goes. And that's where price action always becomes number one. Now, on the weekly side of things, we have this kind of upward sloping channel here. You can see that we did close above the anchored VWAP from this reversal point back in March of 2021. But you can also see that we held right at this trend line support. So all in all, this is kind of a textbook area to hold. Now, if we break down, then that's where you go into a more granular view, such as the daily chart. And that's, as I mentioned, down, let's say, around anywhere from around 32.25 to around 32.50 if we get through that volume gap. So those would be your levels to watch. Now, remember, if we do move to the upside, this would make sense. We're right at the anchored VWAP. We're right at this previous trend line support. We'll see if it can prove itself as support once again moving forward. Chewy. Talk about simple, just horizontal levels of resistance. Look at this. I mean, we don't even need the volume by price for this. Look at how perfectly this area was resistance previously, and then we moved right up to that area again, right around 92.40 to 92.50, give or take a couple cents. So all in all, just a perfect rejection here. But on the weekly side of things, notice here that we do have this inverse head and shoulders. And remember, we do have a wick here. This is when we want to turn on the raindrop and see what was going on within this wick. So in this case, turn on the raindrop on the weekly chart, and you'll see within this wick, we actually do have quite a bit of volume. So that's actually something to consider, that within that wick, there were some pretty there was conviction by buyers. I was going to say convinced buyers, but I don't think that's the right word. You had buyers willing to absorb supply above this resistance line that I have highlighted here. And to me, that tells me that, possibly buyers in control into the week ahead, even after this big rejection on the daily. So we'll have to see, but the inverse head and shoulders is definitely something you don't want to ignore. And the fact that we do have that volume over resistance is something to consider. Now, we did have a little bit of that back in March of 2021. So is this another fake out? We'll have to see. But, this is looking a little stronger than last time. And we do have that right shoulder fully formed now. So, bull case is looking decent. So all in all, that is the chart request. We had a lot of people respond to the Twitter request post. So thank you guys. We picked the top 5 that were most requested. Remember, if you do enjoy these episodes and these different segments, you can always tune in on Sundays. Our season is coming to a close soon, but we do have 1 or 2 more episodes. So make sure to check us out next Sunday. Like and subscribe if you enjoy these. You'll get a notification when we're about to go live on Sundays. And everyone have a great rest of the weekend and happy trading next week.